Hey guys, this is Ryan with TrendLizard.com. A subscriber sent me an ETF to analyze for him. Thank you very much for doing that, Armando. We're going to take a look at XLU for you today. We've looked at this guy before. It is the Utilities Spider Fund, an ETF that tracks utilities as a general broad market. So again, we've looked at it before, but we'll just do a quick rundown of the overall deal here. Incepted in late 1998, had a rough start. Once it put a low in 2002, it's just been on a really nice tear. Obviously, it's taken time, but over that time, it's gone from 10 to about 55, and it's actually sitting right near its all-time high currently. So the first up leg, very nice 5-wave advance, a counter-trend 3-wave pullback that retraced a little bit more than 61.8% of this up leg. And from there, after the low was recorded, it embarked on another massive 5-wave advance that is still in play. So very similar to the overall market in that respect, and I know why you want me to look at it, because it's acted a little bit differently than the overall market lately here. So let's go ahead and zoom in. Basically, we want to look at this action right here to see what's going on. We know that a larger 4th wave pullback began in late 2017, and the question would be, has that 4th wave pullback completed, and has XLU kicked off a 5th wave advance, or is it still in that 4th wave pullback like most of the market is? So let's go ahead and zoom in on that pullback in 2018. This is it here. This looks at the pullback in detail. The initial down leg actually looks like a 5-wave move, suggesting that this was not the end of the pullback, even though that has been the low for the pullback so far. Everything that's happened off that low has been kind of choppy. I'm not finding trendy moves anywhere within this advancing pattern here. Now, again, a lot of the market has turned down in October and has really broken down, but that has not been the case with utilities. It's hung out near the high here, which is why I'm guessing you wanted me to look at this guy. But despite that, it's still there's just nothing really to grab onto here as far as saying that this is the resumption of the uptrend, because again, if it is the resumption of the uptrend, we should be seeing trendy moves here, something like this, an actual 5-wave decline, but we should be seeing 5-wave moves to the upside. So let's take a look at this chart here. This is actually my best effort at calling this a trendy move, and the reason I'm showing this to you is because there's so many things that are creative or tricky about it that make me think that's not what's happening. So first off, we're calling this decline a 3-wave move, even though it very much looks like a 5-wave move. Hard to do. Nevertheless, we could let that go if the up move looked really bullish, but again, it doesn't look that way. It looks like if we were trying to call this a trendy move, we'd have to call it a leading diagonal, then a pullback that actually retraced more than 61.8%, and then the singular decent up leg that's occurred back in June before this absolute mess has played out here. So if we're calling this whole thing counter trend movement, we're calling it a 4th wave, but then the 4th wave actually overlaps with the 1st wave high, and that's a no-no on Elliott Wave terms as well. So it's really hard to like, I wouldn't buy it. I mean, I just wouldn't buy it with what we're looking at here. Again, I think it's more likely that it's still in the 4th wave pullback that started back in late 2017 with a C wave down yet to come. So it would take a move below 50.50 to confirm that. Once it breaks through there, we know with great confidence that we are going to get a big C wave down back towards the 2018 low. In the meantime, there's just nothing to really grab onto, and no reason to own it. If you did own it and there's some reason why you have to own it, I would own it with the stop at 50.50. But otherwise, if you don't, I would stay away from it until there's at least something trendy that's going on to the upside that says this thing is going to last for a lot longer. So that's it. I hope that's helpful, Armando. I hope that's helpful to everybody else. Again, this is Ryan with TrendLizard.com. We do this every day. Come visit us if you have some ETFs or stocks that you want me to analyze in this fashion with a video. Go ahead and visit us, sign up for the professional level service, and we will do this for you 3 times a month. Thanks. Have a great day.